enterprises. Some of them are badly managed. Some of them are essential for public service, but are not providing public service at the level that is required of them and are causing a lot of issues in the budget. Unfortunately, our privatization policy has not succeeded over the years. One bank, a small and medium enterprise bank, has been losing money since 2007. They've been trying to privatize it since 2008. So if they have not been able to privatize for 15 years, maybe the people there working are fine, maybe there's something wrong with the law. There's another asset called Roosevelt Hotel, which is in the privatization, which is an open privatization case since 1996. There may be others. So that's 36 years. Maybe the government doesn't want to privatize this right now, but it's been, they've been trying to privatize this over the years for the last 36 years and have not succeeded. So perhaps the privatization law is not the right law, is not as allowed to privatize these things. Certainly, I think that the people who work for our state-owned enterprises are good people, very professional people. I've had the occasion of being a director of Pakistan International Airlines, and I thought the management people were really good professional people. I've had the occasion of chairing Swiss Southern Gas Company. I think they were outstanding professionals. So we have to ask ourselves that why is it that a bunch of outstanding professionals, whether in PIA or Sui Gas or Sui Northern Gas or OGTC or whatever, or distribution companies, especially distribution companies, why is it that they're not able to perform? And maybe this is to do with some governance laws. Maybe the way the laws constrict them or restrict them and the way they're governed cause them to not be as efficient as they could be in the private sector. So I think that two things that we need to work on is that to the extent that we want to privatize public enterprises, we need to come up with better laws and better ways to privatize them. And to the extent that we need to improve their governance, I think that it's not just a matter of having very good boards, although that obviously is important. It's not a matter of having very good management. That's obviously very important, and like I said, that the boards and management of these organizations generally are very professional and very first-rate. But it's also a matter of having the right laws that govern these enterprises that allows them to thrive and improve. Which brings me to one other thing that people talk about, and that's the IMF program that we have now signed. And it's all the talk these days, at least in the finance ministry. As most of you know, that we were able to sign a staff level agreement with the IMF. That staff level agreement now envisages the IMF program being extended to the whole of next year, and also augment the amount by $1 billion, so that we now expect to get approximately $4 billion over the next 1 year from the IMF. The conditions that the IMF had set, called prior conditions, included some passing of the budget, which we've done. This also included signing of MOUs with the provinces, which we have done. Signing of the MOUs, which we have done. That's also included raising of petroleum tariffs, or PDL, Petroleum Development Levy, which we've done in July. And it obviously there's a table, because the petroleum levy is only 5 rupees on diesel and 10 rupees on petrol, and there is no sales tax. And so there is a schedule according to which we will raise it in the future as well. And since power tariffs had not been changed for the last year and a half, so we had to do an annual rebasing of tariffs, which we've also done a couple of days back. And we've rebased the tariffs for July. We've also approved the rebasing of tariffs for August, and we've also approved the rebasing of tariffs for October. So we've said, and I think there was one other prior condition about interest rates and LTFF, long-term financing facility, and EFS, export financing and scheme, and all of those tariffs have also been, all of those rates have also been raised. So we've met the prior conditions by the IMF to be able to get, hopefully, the first tranche whenever their board meeting takes place. Unfortunately, because of the board holidays, the board meeting is in the later part of August, although I would hoping that it would be in the earlier part of August. There's been some talk about corruption laws, and this is why the IMF thing came to my mind, about some anti-corruption laws. And in fact, although it's not a prior action, it is a structural benchmark. I think the IMF did talk about anti-corruption laws, and they've been talking about this since the fifth review, which I think was in 2020. And there were some disagreements, but this time I was very enthusiastic about this, and I actually quickly agreed to this, except that I just I wanted to add two other things. The benchmark was about forming a team that would do a diagnostic analysis of anti-corruption laws in Pakistan. What I really added, the effectiveness of anti-corruption laws in Pakistan. What I added was two other clauses. One was that not just the effectiveness of the anti-corruption laws, but also whether these laws can or have been used to persecute or victimize your political opponents, because that's also possible. And then third, also, is there a trade-off between efficiency and effectiveness of the government and anti-corruption laws? For instance, Pakistan today is buying very expensive LNG on spot rates, and the previous government was unable to do a long-term deal. And when you ask them, and they've said this on TV many times, that they said that they were scared of anti-corruption laws or NAB laws. So that's a huge cost to the government of Pakistan, because some previous ministers were scared of those laws. So then you have to see what is the effectiveness and what is the advantage of the anti-corruption laws. And inshallah, we will hire, in consultation with the IMF and civil society of Pakistan, we will constitute a commission of some of the best experts from around the world. I hear that New Zealand and Singapore are two of the least corrupt countries in the world, so hopefully we'll get experts from there. We'll get experts from Pakistan, and I told yesterday that I'll get experts from Pakistan Business Council. If there are other civic organizations who want to name experts, I'm more than happy to include and do a comprehensive review, because my feeling is, and this is, I don't have any firm data to back this up, that my feeling is that, even though we've had NAB for now 20-some years, corruption in Pakistan has not gone down. Similarly, we've had these PEPRA rules in Pakistan for 20-some years, but it's not clear to me that Pakistan procures at a much lesser rate compared to the international rates, things, goods and services, compared to what it was doing before the PEPRA rules. So these rules have actually become more of a straitjacket, also an excuse to some people to not work, but these rules have become a straitjacket and not allowing people to work. So that's the anti-corruption part. There is also this part that people talk about friendly countries aiding us, and some people have said that that's a prior condition. I can say that it's not a prior condition, but yes, there is a case that we have a $4 billion financing gap that we have to find during the year, and we will. And as I've said to many people many times, that we are talking to a friendly country about buying Pakistani shares. There is no possibility of us sharing a government-to-government shares on a government-to-government basis. So we are now amending the law appropriately to be able to sell those shares. Even though we've not even started negotiating with the country yet, there's already accusations of how we're selling the family silver and all that. We're only selling shares of companies which are already traded in the Karachi Stock Exchange. We're only selling a little bit shares of each company, so we're not selling majority stakes or ownership stakes or management stakes. And finally, these shares will be sold on buyback basis. So I mean, like if I sell something for $100 today and I can buy this for $105, then really the price is not relevant, right? Because at any given price, I can always sell it back, buy it back for 5%. So all of these will be a repo, will have a buyback clause on those shares. So any allegations of anything inappropriate, I think, just falls flat. But my point was that there is a friendly country, for instance, that is willing to buy our shares, and that would help us go a long way towards funding our gap, financing gap. There are other countries who are also willing to buy our power plants, Baloki and Haveli Bahadur Shah, the two federal government-owned power plants that have been on the auction block for some time, but there are friendly countries that are willing to buy. Again, it's very easy to figure out the market price because we already know what tariffs they have, and if you know what tariffs they have, you already know what profits they have, and if you know that, then you can just figure out a price-earning ratio and figure out a fair market price. There are also friendly countries who are talking to us about giving us energy fuels, whether gas or electricity, or whether gas or petrol or diesel or fuel of crude oil on credit, deferred payment. We already have some deferred payment facilities with some countries, and there's talk of enhancing. So I have more than actually $4 billion of financing. So even although it is not a prior condition, but even if it were, it's more than met. So the IMF thing is going to happen. The other thing that we've done, and I'm not talking about the fact that we've averted default, because we've done that and it's been talked about and we've not defaulted, and we've averted default now, alhamdulillah. But the other thing that we've done is also, when we first came, we put a official ban on a lot of items, which has caused a lot of difficulties to a lot of people. And inshallah ta'ala, within the next couple of weeks, we will try to get rid of those bans. So those bans will be lifted, the bans on imports of certain goods, for instance, pet foods and things like that, and we'll get rid of those bans. But at the same time, we have now put some prior registration conditions on prior approval conditions or prior information condition on certain other imports of raw materials, etc., and of new machines, and that, along with fuel prices coming down and fuel requirements going down, has really reduced my imports. Let me just say that when we were subsidizing diesel and petrol and motor gasoline, for instance, the demand for that had gone up. One, because price was cheap, but also because people were actually hoarding it, and the companies were also storing it as much as they could. Resultantly, Pakistan, which normally has 6 days of diesel, ended up with I think today it has probably like 42, 43 days of diesel. So 7 times the normal storage. Similarly, Pakistan, which has maybe 10 days of motor gasoline, today has 30 days of motor gasoline. So we've actually imported a lot more motor gasoline and diesel, and we probably have 3 to 4 months of, or maybe even more, of furnace oil. So we'll not be importing a lot of those things in the next, we haven't imported them in the last few days, and we are not going to import them a lot in the next fortnight or so. So that is also reducing our import bill, plus some other things that we've done, administrative measures, plus the increase in interest rates, the dollar rate going up, contraction of demand. All of that combined has resulted in our imports, at the port this year. This is as of day before yesterday. The number was $3.77 billion, and since there were, I think, 4 working days left, so we were expecting that the number would be about $4.3, $4.4 billion. I mean, that's a remarkable contraction. In fact, we are perfectly comfortable even if the imports are $5.5 billion. But what would happen is that from next month onwards, inshallah, the incoming dollars in Pakistan by way of exports and remittance will be more than the outgoing dollars from Pakistan by way of imports or some debt repayments, debt servicing, I should say. And because we will have more imports, we will have more inflow of dollars than outflow of dollars, we will inshallah then, therefore, not have the pressure on Pakistani rupee that exists today, and we will, as you will see, that Pakistani rupee will not be under pressure anymore. At that point, we will either be able to build reserves, or the rupee will appreciate. But that's a decision that I leave to the short-term future, 2-3 weeks from now. Today, yesterday, for instance, I know that there was more inflow of dollars than outflow of dollars, but that was just one day. But we've actually controlled the situation quite a bit now, so that imports have really reduced in Pakistan, and inshallah now the export plus remittance, which is and remittance, think of remittance as export of labor, that export of labor and goods now is more in Pakistan than imports. So we have actually turned that corner, and now we've become safe. Of course, this is only a temporary measure. I want demand to expand, and I want economy to grow. And after a few months of breather, these sets of policies will give us to this quarter, will institute policies that once again bring back growth in Pakistan, but an inclusive growth, and most importantly, a sustainable growth. Pakistan has not been able to have sustainable growth. We've seen Pakistan go bust every few years. Every time we go beyond north of 5% growth, we go bust. So we have to come up with a sustainable growth, and it turns out that the way to achieve sustainable growth is happily also an inclusive growth. And rather than getting the manufacturing sector, which imports a lot of machineries and then also raw materials, rather than growing the manufacturing sector, if we start growing by farming sector and the urban poor, hopefully